Gustavo Bagatini, senior European economist at RBC Capital Markets, joins us with his view on the situation in Europe. Gustavo, it comes as a bit of a surprise, doesn't it? I mean, this is a massive amount of liquidity injection by the ECB, and yet the market's not rallying.
I think that's true. I think in a way it just shows the fact that the surprise element wasn't there for the second LTRO, and because the number came very much close to certainly to our expectations. I think in a way the markets largely took it in stride. You know, it was expected that there would be this massive liquidity boost, and markets now are ready to move on to the next thing. And I think today we have lots of PMI data coming out from around the world, and generally the sentiment has been positive. Most of the manufacturing PMIs have come slightly up. Definitely the ones for China, Taiwan, Netherlands, Ireland, Hungary. Even the ones where you have seen a bit of a fall, such as in India or Russia, we're still in expansionary territory. So the data also signaling at least a stabilization here, which should be positive. But specifically to Europe, we have a leaders summit starting today, but I think in my view that's largely going to be a non-event.
Gustavo, I was just coming to that point. Now that we're done with LTRO2, you think the market in the near term at least is going to pick up triggers and direction from what comes about from the EU summit, or is the expectation really low?
I think it would be unfair to expect very much at this stage. What you will have at some point over the course of March is a discussion on increasing the size of the European firewall, the bailout fund, the ESM. But the Germans have been very adamant that this is not going to be decided upon today. The second thing which we will have tomorrow morning is going to be the signing ceremony of the fiscal compact, which is a positive step towards more economic and fiscal convergence in the euro area. But a little bit of cold water has been poured upon this, given the fact that the Irish are now going to have to go to referendum, so the actual implementation of the new fiscal compact will probably be a bit more protracted. And the third thing, which is Greece, I mean, that's still a topic situation until the debt swap is complete at the end of next week, and we see the kind of participation and whether or not the CDSs are considered. It'll be difficult to say for sure what the impact of that will be and what the size of the second bailout for Greece would be and what the contribution from Europeans. But hopefully that will at least take Greece out of our sights.
Gustavo Bagatini, thanks for joining us with that perspective on European markets live from London.